Welcome to Lykken on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lykken, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lykken on Lending. Now your host, David Lykken.
Folks, we're back with Pavan Agarwal, our AI expert, and we're going to get into VA lending. Pavan, there is a problem, and I want you to outline the problem for us.
Yeah, so the VA has really great guidelines to help veterans, and they were written, 40 years ago, 50 years ago, and they don't evolve. They don't adjust to the current needs and the situation. And right now, what has happened in the last 7 years with this high inflation environment, we've seen this massive run up in home equity. So Americans today are sitting on $40 trillion of home equity. You just stop and think about
$40 trillion, yeah.
Yep. That's as much home equity as there is national debt. If you just swap the two, then we don't have any debt.
Wow.
Or you can't do that. So the point is that the VA never assumed that you would have 20-30% increase in home prices and home values within a year or two. Okay. And that's what's happened. Okay. And so their guidelines were designed to help veterans. It was designed to make sure the veterans always had access to the lowest payments and the best options and the easiest options.
Down payment, if they wanted the least down payment, the best payment options. But we have a problem. So let's get in defining the problem, because you have a solution, I know, right behind it. Yeah. Vaughn, we know how the VA program was designed. It's been there for the benefit of the veteran, which is a wonderful thing, and we want to honor our veterans. But what's the problem as it relates to what's happened because the guidelines and the program was created 40 years ago?
Yeah, so the program is created to get veterans into homes easily with zero down payment. I mean, FDR signed that into law, or the 1940 something. And since then, the VA got smart and did the right things and said, hey, if interest rates drop and your payment is going to get reduced, then you can do a VA refi, and which is great. And then they said, okay, then you can finance your closing costs. If there's equity, you can finance your closing costs into the VA refi, and which makes sense, right? That keeps you want to make housing as affordable as possible to the veteran. But the VA never assumed that there would be such massive run up in home equity so fast. And so there's no circuit breaker in that. There's no protection in that. So we literally are seeing deals come across, and our AI rejects them, right? So Angel AI rejects these deals, although
it's loan applications.
Yes. And this happens. Now, we analyze data, we can see this in mass numbers. So that, this is the kind of pattern.
Are we talking about refinance or purchases?
We're talking about refinance. This is a refinance problem, right?
Fair
so
enough.
let me give you an example of a real deal. This is a real situation. This was a borrower in Texas. Hold on, get the exact numbers. Give me a minute here. I got it right here on my notes. Okay, so the exact numbers, the lender stripped away $37,000 of home equity. Okay, and saved the veteran $5 a month.
Wow.
Right? I mean, and no one with good conscience can do that, right? If you just do the quick math, that's going to take 7,400 months to ever break even on that thing.
What does that equate to? When we have a $5, it stripped out $37,000 in equity. What does that mean? They'd have to keep that mortgage for how long?
For 616 years.
My gosh. Yeah. That is just so your system is kicking these out.
It's kicking these out, right? So
But
technically that meets the VA guideline.
The mortgage industry per se.
Anything that goes to Angel AI will get declined. But what's happening is if it gets declined, Angel AI declined and says don't do it.
The point of it is that you said Angel AI is kicking these out, but that's because your technology is written such a way is to protect the veteran and to make sure they get the maximum benefits. Where that loan, if it were not going through Angel AI, would be going through a regular system, the regular mortgage lending industry lender without Angel AI, and would be getting approved because they technically qualify.
Correct. Yeah, technically on the plain language of the reg, it meets the plain language of the reg. So it's getting through, and I know, like this particular loan, I know it closed at one of the big lenders. Angel AI rejected it, and the broker took it to another lender, and it closed. Right, and this is one of thousands, tens of thousands of loans that are closing. So we're kind of in the interest rate markets at a high on the 10-year, and we can see with this war ending and things straightening out again, we're going to see this interest rates drop half a point, maybe hopefully even a point. And we're going to see a lot of this stuff where a lot of borrowers are going to be sold on the payment savings. They're sold on the payment savings, but no one ever explains to them how much of their equity they're losing. And this equity is so important because that's their retirement. That's when they retire, they need that money to fund their life. That's when you go, either you sell the home, take the equity out, and move down into a smaller house, and then use that equity to live off, or you get a reverse mortgage. So you're literally, by doing this for $5 a month, you're taking away that veteran's retirement.
Do you have any insights as to why they applied for that loan? What were they trying to achieve? Or was that where there was a marketing, where they're going out and marketing to the veteran and some benefit? Is that right?
Yes. I mean, it's just general marketing, refinance, lower your payment, which is fair, the marketing was perfectly fine. Right. So the consumer received the marketing, hey, I can lower my payment. They called the broker. The broker said, yes, you can lower your payment. And I worked it out. Hey, you're going to save $5 a month in it. And it's the way it's sold, which I don't know exactly what the broker said, but it's just something, that people can look into, is if it's sold as, hey, it's not going to cost you anything. And that's how loan officers are loose with the language, right? And it does cost them something. But if it's sold as, you don't have to bring any money to closing, which is usually how it's sold. Okay. And which is fine. So when you say you don't have to bring any money to closing, and the borrower interprets that in his head as, oh, I don't have to pay anything. Right. It's never explained to the borrower that, no, you are paying. It's just hidden. It's hidden, and because your equity just got ripped out. Right. Yep. So this is as bad as a pay option arm. It's like, people would refinance and get these pay option arm, and they'd tack on $30,000-$40,000 of fees and take away all that home equity. Right. So this is the same exact thing. They've turned, these lenders. I don't blame the brokers. I blame the lenders that are actually funding it. They've turned the VA mortgage into a pay option arm. And we all saw what that did to the industry in 20 years. So here's my advice to lenders is, the way when we originate a loan, and the way that the ethics and the core of Angel AI is, Angel AI asks itself, would I give this loan to my mom or to my son? Right. And if I wouldn't do it for my own family, right, and if it's not a good deal for my own family, it's not a good deal for anybody. Okay. So, and no lender, no loan officer in their right mind would sell a $5 savings to $37,000 of equity stripped away to anybody. Right.
Well, I think
so. It just stick with the ethic.
Yeah, stick with it. And I think lenders that are listening to this, I think the most important thing that you walk away from, I do legal expert witness work. I testify on behalf of the industry, defending the industry when we have a lot of attorneys out there that are going after our industry. But this is indefensible. If you're doing this type of lending, I'm just telling you, lenders, you need to take a look at this, because whether you're a loan officer or a business owner, this opens you up to liability. And I'll just leave it at that. And I want to go into now, how is it that using Angel AI protects them? What is it that you put into your system? That broker was probably a little frustrated because they didn't get to make a commission on this deal. They had to go get it funded elsewhere. But you're actually protecting, in my opinion, the broker and that company from potential problems down the road, even though it's all done somewhat according to the guidelines, which is, again, the problem.
It's technically to the guidelines, right? So VA can't say you violate the guidelines. It's technically to the guidelines. It's not in the spirit of the guidelines, but it's to the technical wording of the guidelines. I can't imagine anybody at the VA ever imagined a use of the program in this way.
Yeah.
I don't think that was ever there.
Back when that thing was designed, we never had the kind of appreciation we've had on home values. And
exactly.
For example. Well, let's talk about the solution. When you do provide as a solution, is that you're then going in and doing an analysis of the loan. Talk about that.
Yeah. So if you go to Angel AI, there's an app in there called VA Refi Calculator. and any consumer can use it, any broker can use it, and you can, and it'll ask you a couple of basic questions like, what is your current interest rate? What's your current payment? And what's your home worth? And it's going to tell you whether there is enough benefit to the refi or not. And it'll breaks down the benefit. Like basically the recoup that I just did, like in this example, it would say, heck no, right? He's like, I do a loan that's going to take 600 years to pay.
Get the financial benefit out of it. Yeah. That's
right?
really good.
It's a reasonable benefit analysis it does. It says, is it reasonable for you to do this or not? And it's just common sense,
Yeah. It is common sense, but we're noticing when it comes to being able to make a commission, some common sense gets squished or pushed out.
Yeah. It's we can take that into a more spiritual and theological approach. And, I'm sure there's a lot of scripture that you can cite on as to why people do these things.
Well, it's doing unto others what you want to have done unto yourself. I mean, I think you open the door for all kinds of things. But let's get into talking about when this should be happening. If someone is using your technology, Pavan, they're going to come to that realization
Right
almost immediately upon putting in that information. The borrower information, whether it be the borrower or the lender.
Yeah, in seconds. It'll tell you immediately, don't do this. And it will tell you why, and I'll break it down for you.
And explain it exactly. What are some other scenarios where you're seeing where veterans are being, I'm not going to say abused or any other lending situation, but I mean, being taken advantage of or not provided? I think it's best saying not provided the best financial advice.
Yeah, well, I think here's another issue. This is not just for veterans, but across the board. There's people are skirting around the ability to repay rules that were passed in 2008, which made a lot of sense, right? And basically, you don't put a person in a house if they can't afford it, right? And then there's ways that people are getting around the guidelines, both whether it's a VA or HUD or Freddie Fannie guidelines. They're just either they're getting around it or just flat out ignoring the guidelines. And the number one thing is tax bills. In a lot of states, when you can get the tax at closing, the tax statement at closing, right? And then after you purchase the house, it's going to get reassessed, right? And a lot of lenders will close it on the tax bill and not on what the new assessment will be. Okay? And so if your ratios are low, it doesn't matter. But a lot of VA loans, a lot of FHA loans, they're right on the borderline, like 55%, 56% DTI, right? And that extra $50, $100 increase in taxes, they can't afford the payment anymore, right? So you're setting up these borrowers, and they're expecting a payment to be, whatever X, right? And then a couple of months into the servicing, when the new tax bill is issued, now suddenly they get sticker shock and the payment goes up $100 or $200 because the taxes went up, and now you're pushing them to default, right? So and you're taking a family who qualified for that house, and it was tight, but they qualified, and they figured out a budget and a plan how they can make that payment. And then suddenly the tax bills go up, and you as a lender had a responsibility. You knew that the tax bill was going to go up, right? We all know that, right? And there's a few states like California's Proposition 13 and stuff where there's some reasonableness about the tax bill, but in most states it goes up dramatically once the house is sold. And then if it's a new construction, and there's in California they have these things called Melrose tax, and other states have that too. In new construction, you have all this extra taxes that come on once you buy it from the builder, once you drive it off the builder's lot, right? Okay, and if you don't include those taxes, then you're going to have a big sticker shock afterwards, right? The regs say you're supposed to, but people ignore it, and the auditors miss it. Auditors don't even know to look for this stuff.
What other things that is Angel AI catching that lenders should be aware of that can save them from liability and, more importantly, help the consumer in a more effective way?
Yeah, well, see, like this kind of stuff is the reason AI can catch this is because it has all the data, right? It's infinitely connected. It's got the tax data and so forth. And most lenders, like when they review the settlement statement and they review the tax statement from the county, right? They don't have people, and I think this is less. It's not exactly willful. This is more incompetence, right? You don't have people that are trained to understand this. I think at the top of the house, lenders understand it. At the top of credit underwriting understands it. But in the weeds, as these documents come in, people don't know what to do, and they just take whatever escrow tells them and drop it in the system, drop it into their the legacy system and moves on. There's no intelligence, right? And those systems aren't exactly, they're not integrated. They don't get the data automatically, right? And they also don't understand how to project forward and how to predict faults, right? These are all things that AI does. And to look for these patterns and say, okay, wait, number one, you're supposed to, the reg says you're supposed to use the new tax rate. And number two is you have to be able to get that in an automated manner, right? And another example is declining income on businesses. I mean, Fannie Mae has specific rules on how to treat that, right? And you need to have an AI that can, because it's hard. You got to read the tax returns clearly, and you got to read the P&Ls clearly, and you got to understand how to figure out whether the income is declining within the parameters that Fannie Mae set. And if it's not, if it's within the parameters, you're okay. You can move forward. If it's not, then you got to use a lower income and all these things. So like processors and underwriters have to remember those rules, so they have to know how to read a tax return, right? That's CPA level work, right? And then I can think of CPAs that I work with that couldn't read a tax return correctly, right? So we're asking processors and underwriters to read the complex P&Ls and tax returns, right? So this, like, drop it in Angel AI, it'll read it and analyze it, and it'll tell you, hey, the income is declining, so you got to adjust it downwards, and this is what he really qualifies for. And when you make those kinds of mistaken underwriting, and Fannie Mae audits you or HUD audits you, you're going to get an indem or a repurchase.
Yep.
And so it's going to cost you money.
This is a great example of all the many things, the benefits of using Angel AI.
Right. Well, not only that, but you're saving potentially a borrower from getting into a house he can't afford. That's the number one as lenders, our number one priority is to make sure that the borrower can make his payments. It's as simple as that. Forget the guidelines, forget everything else. It is unethical to give a loan to someone if they can't afford it. Bottom line. And frankly, that's the reason we survived through 2008. We've been doing this 45, 46 years. That's the philosophy of the company. We never did those kinds of option arms and things like that. Things that we could have made a lot of money really fast, but we didn't do it because that's just not who we are. It's about helping borrowers. It's about helping the community.
Which is at the core what Angel AI is about, because at the core, that's what you're about.
Exactly.
Pavan, it's always good to have you come on the podcast. We got an important message out, recorded and record a little over 20 minutes. We want this to go out for our lenders as soon as possible. Be aware of this, lenders. There are risks out there by doing every loan possible. You're actually creating liability for yourself, even though it may fit the guidelines. Get familiar with Angel AI to help you mitigate that risk. Pavan, thanks for being here, friend.
Thanks, David. Cheers.
Cheers. Folks, I hope you enjoyed this podcast. It's an important message because when you're doing lending, we need to make sure we're doing it that benefits the borrower. It's not only the ability to repay, that's one thing, but is it truly providing benefits? For those that are not listening to this message, they could get themselves caught in a situation where there could be liability, because we just want everyone listening to this podcast to be doing the right thing for the right borrower and protecting themselves and their interests as they do so. Thanks for being here, everybody. A big thank you to our sponsor, Angel AI, making this podcast possible. Have a good rest of your week and look forward to seeing you back here for the next podcast.
You've been listening to Lykken on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lykken on Lending.